What's up, everyone? It's Karthik with MoneyVest. So Nvidia earnings are coming up. It is going to be the most anticipated and the most important earnings for this calendar. Reason being is because Nvidia is the hottest stock in the market by a lot of measures. It's increased by over 1,000% in the last couple of years alone. And of course, it's trading at a valuation which is well over $3 trillion that has seen the company even take over the likes of Apple and Microsoft in terms of its valuation. So we got lots to discuss and unpack in this video. I have a really big trade going into next week on Nvidia, and that is I've essentially sold puts on Nvidia with a 15% drawdown threshold because of the historical analysis, which we're going to break down in this video. So we're going to talk a little bit about this as well as this. I've got a lot of data here for all of you. Make sure that you drop a like, subscribe to the channel, and share this video with other traders, investors, people who are interested in joining our community. And of course, may also want to take a look at this analysis, which I think is going to be very, very important. So first things first, let's take a look at the numbers themselves. So Wednesday, August 28th is when Nvidia is going to be reporting earnings with revenue expectations of well over $29 billion and EPS expectations of well over 65 cents per share. There's been some different expectations on different platforms, but $29.18 billion is the revenue expectations, and 65 cents per share is going to be the expectations for earnings. Again, 64 cents and 28.7 billion is what's listed on TradingView. So we can somewhat update these numbers here. So in other words, if you come over to the overview tab, and if we update this number to 64 cents, we are now expecting over a 136% increase on a year-over-year basis, and 28.5, 28.2, 28.6, again, depending on different platforms, you're going to find different numbers for Nvidia. So let's just go ahead and put this 29.2, and we're looking at 116% year-over-year growth for the company. So Nvidia reports second quarter earnings for fiscal year 2025 after the bell on Wednesday. Analysts expect revenue and earnings to more than double from the previous year, and investors will likely be watching the sustained data center segment growth. The chipmaker could also comment on reports that its Blackwell chip is delayed. Now that is the key question here. That's the only question, because that's the only way I see Nvidia dropping after the earnings are released. So again, some analyst expectations now over here on Investopedia, just a little bit under $29 billion in revenue, 59 cents in earnings per share, and net income of just under $15 billion for the company. Nvidia's data center segment has been growing rapidly amid the rising demand for its advanced computing and tech support to artificial intelligence. And data center revenue reached a record high of over $22 billion in the first quarter of fiscal year 25, surpassing its previous record set in the prior quarter. And analysts are expecting the data center business to be just under $25.2 billion for the fiscal second quarter, which would set a new record high, with sales more than doubling from the year ago period as well. But the main spotlight is, of course, going to be the Blackwell delay. So reported delay in Nvidia's Blackwell chip sent the chipmaker stock tumbling earlier this month, though Nvidia has indicated production is still on track to ramping in the second half of the year. And some analysts have suggested that investors' worries are overblown, with little impact to customers. Raymond James analysts, who said the delay could have a modest impact and support increased demand for earlier chips, expect management to downplay the speculated delays. And Daniel Adds also mentioning that Nvidia is at the heart of this bullish tech trade in AI revolution. So in other words, the heart and lungs of this bullish tech trade in artificial intelligence. And Ives also expects a shock and awe quarter from Nvidia, saying continuing strong demand for the company chips will have a ripple effect across the industry. In recent note to clients, Ives also estimated that for every dollar spent on Nvidia GPUs, there is an $8 to $10 multiplier across the tech sector. So stakes are high. It is priced very, very rich. This right here is the weekly volatility for Nvidia. And what you'll notice is that if you come down here, majority of the events on a weekly basis, this is accounting for, I think going back as far as 1990s for Nvidia. And this is nothing but a bit of a bell curve, right? That's really what we have here is, this is what a bell curve looks like, because majority of those, returns have occurred over here. Now, what I've done is that I've essentially sold puts for Nvidia for next week, which is, I've sold close to 6 puts worth well over $70,000 on Nvidia that are expiring on Friday with a strike price of 105 and 108. That puts Nvidia roughly 15% down from its current levels. So right now it's trading at just a little bit over $129. So with my strike puts at 108, puts us roughly a little bit over 16% down, and 105 is going to be about 18% down. So if Nvidia drops over 15 to 18% next week, only then my puts will be in the money and I will have to buy shares at those prices, which by all means, I would be very much interested in buying Nvidia at those prices anyway. So really this is a trade on these rare outcomes over here. These are the, these are the events in this distribution bell curve, which are really, really rare, right? So you can see the 14% to as much as 17% sell off here, and a 15 to 24% increase on a weekly basis for Nvidia. But really, if you come over to this spreadsheet, which is essentially going over the probabilities and how Nvidia has done over the last 8 quarters. So we're going back as far as July 2022. And what you'll notice is the revenue beat has been 100% of the times. The company has beaten expectations for revenue 100% of the times, 8 out of 8 times in the last 2 years. In other words, 8 quarters for the company, with a median beat of over 7% and an average beat of over 7.5%. When you come to EPS, it's only been once that Nvidia missed expectations. That was back in October of 2022. You can actually see that on TradingView as well. You pretty much scroll back a little bit. You can see that beat. We've got a beat, 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 and we've got a miss over here in October 2022 with a 17% miss here. I've got a little bit over 18%, again, varying expectations, but overall, it's got a very strong track record of beating expectations, and earnings have beaten expectations by on average and median well over 10%. Now, how has the stock performed in the last 2 years? In other words, 8 quarters after the earnings have come out? Well, you've got a 75% probability that the stock is going to go higher by average 8% and a median move of 6.67%. So that is the expected move. Options markets pricing in well over 10%, so double digits in either direction. But based on earnings and based on the last 8 quarters or 2 years, we've got a 75% probability of a average move over 8% in the positive direction of just under 7% on a median basis. And that's exactly one of the reasons why Nvidia was the best trade for the one that I just took, because of the very fact that not only from a probability perspective, you can see over here, stock performance, there's only 2 stocks that are over 70%, and that is Nvidia and Apple. But Nvidia also has a much higher average and median move of well over 6 to as much as 8%, versus Apple's got a really, really small percentage move, right? Only 2.5%. So it's not really moving that much. That's why premiums and implied volatility is going to be really low. But for Nvidia, the actual strikes and the premiums were making a lot of sense, because not only does it have a higher probability, but it also has a much higher range within which it moves after the earnings. Now, coming over to our own website, and what I've done here is that I've essentially, this is internal beta right now, so this is still under construction. Reason being is because we're still building this one model, which is the case analysis. So this is a brand new model for everyone that they're going to be able to utilize. We already have the discounted cash flow, the earnings model, the net liquidation value model. Everything is already live on our website, so you can access this if you really want. You'll be able to do your full comprehensive analysis on individual stocks, over 17,000 of them. You can take a look at the market snapshot, earnings calendar. We got the economic calendar coming out very soon, as well as very soon you'll be able to track your own portfolio with your portfolio analytics as well. But if you come over to the market snapshot, again, Nvidia is really only down 8% from its all-time highs and a little bit of a pullback. But let's just come over to the analysis, right? Just a little bit under 3.9 M-score. And the beauty of this case analysis is that you can now actually figure out what your bear case, base case, and bull case is going to look like for every single stock. So in this video, I'm really just going to be plugging in some numbers for my bear case, base case, and bull case estimates, and that's going to show you how these change. In other words, how overvalued, undervalued Nvidia is possibly going to be based on current prices, based on those expectations for bear case, base case, and bull case. So a couple things that I really want right now is going to be the margins. So first things first, let's plot the 10-year margins for the company. And we're really going to be pricing in for net income. So you can see that if you come over to Analyzer and Case Analysis, it gives you options, right? So you can either analyze for 3 years, 5 years, 7 years, or 10 years. We're going to do 5 years. And then if it also gives you options for what is it that you want to analyze for. Is it free cash flows, operating income, EBITDA, revenue, net income? So let's just analyze for net income for 5 years. So for that, I really do need the margins first. And if you come over to the last 10 years and you come all the way down here, you plot for net margins. If you take a look, I mean, Nvidia for the most part was trading at around 35%, 25%, 25% over here, back up to 36%, dropped in 2023 to 16%, and then exploded up to over 40%. And that's really where the stable margins have been for Nvidia, well over 40%. And then last but not least, if you come over to fundamental analysis and come over to analyst estimates, what is the Wall Street expectations for net income growth? In other words, earnings per share growth. We've got an earnings per share growth for Nvidia over the next 7 to 9 years of well over 29 to as much as 26%. So you've got a growth rate of 134% this year. Then you've got 80%, then you've got 56%, 45%, 37%, 29%, so on and so forth. And it compounded annual growth rates about 29 to as much as 26%, with the forward P multiple, of course, coming down as growth rate accelerates, earnings per share grow from 46 down to as low as 18. So that is a really, really low growth rate for a company like Nvidia. So now that we have those two numbers, margins and the growth rate, now we can come over to our analyzer and do a very simple analysis of the next 5 years for net income. And the margins on the base case, I'm really only going to plug in, let's say, 46%. Bear case, I'm going to drop this down another 4%. So let's say margins come down to 42, and bull case, they increase to 48. Okay, so that's going to be the expectations. Bull case is still well below where the last year's margins were. And then when it comes to the growth rates, we already know that Wall Street's pricing in for 29 to 30%. I think that's a little bit on the higher end. So I'm going to come down to, let's say, 25% growth rate. Bear case is going to be 20%. Bull case, we can expect 30% growth rate. Now, P multiple, as we already know, it's trading well over 40 times at the moment. Let's just say it drops down to 30. So I'm going to plug in for 30 times P multiple. In the bear case, I'm going to drop this down to 25. So 25 over here. And then I'm going to increase this to 35 in the bull case for PE multiple. Shares outstanding, we're going to keep this intact. Let's say that 0%, no share dilution, and then almost 2% share dilution in bear case. Bull case is going to be a little bit 2% share buyback. Discount rate, we're going to plug in about 12% here with the base case. And bear case, we're going to bring this down to, let's say, 10. And the bull case is going to stay put at 14%. Margin of safety, 15, 10, 5 is fine. And if you scroll down, this right here is where the fair value ends up for Nvidia in terms of the percentage differences. And largely, for the large part here, the reason why there's such a discrepancy, and really it's the bull case that is coming in at 35%, is because of the valuation and how high or how expensive it trades. Now look what happens if I just simply increase my base case to 40, so 40 here, and then I increase my bull case to, let's say, 45, and increase my base case to, let's say, 35. So now we're looking at a fair value of closer to $70. So closer to $70, which is still 45% lower. And then if you take a look at the bull case, we're looking at $107 per share, which is just about 17% lower than where Nvidia is trading right now. Now, this may seem crazy, but this is exactly the model that I shared with everybody in our Discord just a few weeks ago. This was part of our 37 stocks and ETFs video, so shopping list. And I posted Nvidia Corporation over here. And these were the prices where I was comfortable nibbling in, or basically buying light buys and heavy buys. So 110, we got $96, we got $76. And look where my fair value was. My fair value was actually at $72 per share, with a very, very no-brainer buy target at 66, meaning that if it actually ends up at $66, it would be a no-brainer buying opportunity, with $72 still being the fair value on the stock based on certain expectations. Now, again, you can come over here, play with the numbers, see what works for you. You don't have to take my analysis as the end-all, be-all target, because that's why we've built this calculator in the first place, is that you can analyze for yourself what makes sense for individual stocks for you based on different analysis and different numbers that you're plugging in for margins, for growth rates, for multiples, for shares outstanding, for discount rate, for margin of safety. Everything is going to be available over here, and you can figure out what's the fair value. Now, for me, the true fair value for Nvidia is going to be somewhere in the $80 to $90 range. I would still consider sub $100 in the $90, $95. Like also the thing is that I also have a margin of safety, right? So if I remove this margin of safety, I don't know right now, it's internal beta, so it won't calculate, may not be able to calculate this. But if I remove for margin of safety, yep, so not able to calculate. There we go. So okay, $77 and $111 in the bull case, and I do believe that Nvidia has the potential to grow its bottom line by over 30%, and 48%. You know, keeping those margins at 40% is going to be a bit of a challenge, right? As more and more companies come into this space and the competition starts to heat up, it's possible that margins get driven down as technology improves, as there's more competition. But if Nvidia can maintain 48% as the margin, 30% growth rate, and demand, and trade at a 45 times P multiple, and of course accounting for that share dilution of negative 2%, then of course then it's possible that the $111 value holds up. But there's a lot of ifs with that analysis, right? So I would feel a lot more comfortable, like I said, sub $100, closer to $90. That's exactly why I sold those puts in the first place at 105, 108. And then once you account for that premium, it is even lower. Now coming over to the technical analysis on Nvidia going into next week. So this right here is going to be the full breakdown for Nvidia stock. So we're gonna quickly do some analysis. Of course, we had a nice V-shaped recovery after being incredibly oversold. We're starting to form a little bit of a bull flag here as well after a very nice recovery back up, and support level is going to stay put down at 118 with a massive resistance sitting at roughly 139 to as much as $140 per share for Nvidia. We're still well within the context of a higher high and higher low. So this right here is the overall trend within which Nvidia has been trading. So first of all, very nice consistent uptrend here. And this right here is the overall uptrend since October of 2022. Boom, pushing higher, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And this right here is the recovery that we're witnessing right now, with a resistance all the way up to $139 to $140. Support level is going to stay put at 117 to 118 in the near term, down to as low as $96. This right here is exactly where I bought a lot of shares a couple Mondays ago. That's where I feel like the value is also very good from a risk reward standpoint. But this recovery, once again, has been very, very quick for Nvidia of over 44%. So let me know your thoughts down in the comment section below. And what do you think? Like for me personally, I'm continuing to buy Nvidia on any weakness, and will also keep on selling puts at lower strike prices. If it gets down to that level, great. If it doesn't, that's still premium for me that I can collect every single week, every single month. So that's a strategy that I'm employing right now on this stock. Let me know your thoughts down in the comment section below, and make sure that you drop a like and subscribe to the channel. Happy investing. I'll see you all in the next video. Take care.